Hey guys, and thanks for watching Smart Money Minds. My name is Ben, and in today's episode, I'm going to be talking about a burning question that a lot of people have asked me about, and that is, what should I invest my first $1,000 in? In my opinion, my strategy would be this. I would put my first $1,000 into something that is very stable, that pays dividends, and something that is safe and something that you have general knowledge about. And for me, the easiest thing you can buy with your first $1,000 is some stocks in Canadian banks, which is TD, BMO, RBC, the big 5 Canadian banks, as almost all of them pay dividends, and also they're very well protected against downside due to very strict Canadian financial laws. And this will provide you a very strong foundation for you to work from. Just because you spent your first $1,000 doesn't mean you should sit there and do nothing. Think about your next $1,000 and the $1,000 after that. Keep putting it in the same bank stock as consistently as you can, and make it a schedule, and eventually let it auto withdraw and buy the stock for you. It doesn't matter what price the stock is, just keep buying a little more at a time, because you want to invest in the market and let time make money for you from dividends and potential growth of the stock. Once you start this investment process, start doing some research into some of the stocks that you're interested in investing in an industry that you're quite familiar with. Once again, dividend income is important, and a lot of bigger companies offer this, and this is the safest way for you to grow your account. However, because the risk is low, also your potential gain on income is low as well. Let's say you do want to take on a little bit more risk for a bigger reward, then maybe split up your $1,000 initial investment and use $800 of it to buy some bank stocks and to build your base, and spend $200 of it to buy some more risky stocks, some more smaller companies in your industries or some emerging markets like marijuana stocks or into even cryptocurrency. With riskier stocks though, you have to run the risk that you could lose all of your initial investment, and you have to be okay with that, and you must be prepared to accept that as a loss. In the end, the majority of your money should be spent on building a strong financial base with big companies and stable companies that give you dividend, while you can take some smaller risks with smaller amounts. For example, I used to be in the aviation industry, so I'm familiar with names and companies like Bombardier, Boeing, and other airlines like Air Canada, Delta, and WestJet. I have a little bit of inside information with what factors affect this industry, like fuel prices, travel bans, natural disasters, etc. So for my first $1,000, I would put $800 into a bank, so like TD, and I would put $200 into WestJet. I know that WestJet doesn't pay dividends, but I'm okay accepting that loss if WestJet was to ever go out of business, which is highly unlikely. So for me, I would try to invest $1,000 every 2 months. And that would be into TD and into WestJet until I get $5,000 into TD and $1,000 into WestJet. Then at that point, I would consider looking into another Canadian bank or another airline company, or just in an entirely different industry like tech. Like, I like the Avengers and Marvel, and I know that Disney has been buying up the likes of Star Wars, they've been buying up Marvel, and they've been buying all these studios up into conglomerations. So that might be another investment I want to look into, such as Disney as a company. You should adjust how much you want to put into each company, and remember to diversify in what you're putting your money into. For example, if fuel prices go up, that affects all airlines. And so if I'm putting all my money into airlines and the aviation industry, then that might not be such a good idea, because that's putting all my eggs in one basket. In the end, we all have to start somewhere, and I recommend you to start as soon as possible. If you don't want a financial planner to look after your money or put your money into a mutual fund and let it do its own thing, then you gotta look after your money yourself and put that money into the market. And consider that money gone until you hit retirement. Let time in the market and the economy look after your investments and let it grow for you that way. So, in the comments below, let me know what you plan to do with your first $1,000 or what you did do with your first $1,000 investment. What industries are you looking to put your money into? So make sure you comment below. You hit that subscribe button. I want you to hit that notification button. Please like this video and join me for more future videos soon. And we'll see you next time.